Washington Post Alan Sloan published a story about Ted Weschler, a relatively low-profile money manager based in Charlottesville, whose retirement account has outperformed the S&P 500 by hundreds to one. How, you may ask? Just like Peter Thiel, he used a Roth IRA. Though that he outperformed Vanguard's low-cost S&P 500 index fund, a standard investment benchmark, by even wider margins. His retirement account is now worth $264 million at the end of 2018, and that's more than a 300,000% growth from 1989 to 2018. This is the best part. He didn't use any insider games like Thiel used. Weschler said he just put his numbers by investing in only publicly available securities. Weschler converted his regular IRA to a Roth IRA in 2012, but not before suffering a 52% loss in 1990. What happened? Early in the 90s, he had some gains, but his fund's holdings, Continental Health affiliate stock, and Inalogic trace bonds took a 67 and 55% hit from what he paid for. Weschler converted what had become a 9-digit IRA into a Roth IRA in 2012, even though that required him to pay $29 million in federal tax. As you know, the money going to is tax deductible in a regular IRA, but withdrawals are taxable. And you have to start taking annual withdrawals when you turn 72. With the Roth, the money going in isn't deductible, but the withdrawals aren't taxable. Weschler thought that he could save enough on future taxes to justify paying the taxes today. Converting to a Roth from a regular IRA cost Weschler serious money in 2012, but he won't have to pay the IRS anything when he takes the money out of the Roth down the road. That means that down the road, he'll save lots more on tax than what he paid 9 years ago. Weschler maxed out his contributions to his 401k plan when he started working in 1983. By 1989, his account was up to $70,384. By 2018, that $70,000 had grown to $221 million. That includes his contribution, employer matching contribution, and capital gains. Weschler eventually started his own hedge fund. He said that it produced more than 22% returns after fees, and that's annual returns for his investors, which is a terrific record. In 2010, he won the annual auction to have a lunch with Warren Buffett. He actually won it twice. After the second lunch, Buffett actually offered him a job, and he accepted it. For Berkshire, he looks for investments that can absorb a minimum of $500 million without giving Berkshire a 10% stake in that business. For his own personal investments, he used to buy beaten down bonds of companies that were in less than dire straits than they seemed to be, and stocks of little known companies that he determined were in much better shape than the market than they thought they were. Weschler spends a lot of time reading and thinking and studying companies and industries to find things that the financial markets don't seem to be looking for. And through all of his readings, and some of mine too, there are several things that are consistent. Start early, maximize possible contribution, think of equities, and ignore all the other noise. Not all investments must pay dividends. Some must be used as equities. And we can help you with something like that that's similar. Gold is a favorite investment because of the equity that it offers. And if you want to know more about it, give us a call at 877-646-5347 or visit our website at noblegoldinvestments.com. If you're interested in investing in precious metals and you want to talk to a no-hassle representative that has experience in physical metal, give us a call. Phone number is 877-646-5347. Our phone lines are always open, and we're happy to answer any of your questions.